Welcome, welcome. Shuffle on in. We'll get started momentarily. Welcome to today's webinar. Joining us maybe on your lunch break. Go over some digital assets, crypto, whatever you prefer to call it. Give you some insights there, hopefully some practical knowledge. So again, we'll get started here just in a minute. Let everybody get into here. So we go ahead, share my screen, and we will start by just going over a little bit of where we've been and where we're going while we're waiting for everybody to start the content for today. So if you missed it last week, we were talking about entrepreneurialism and investing and being financially successful, in a very, if we think about things from like socialism to laissez-faire, somewhere in the middle, right? Like, do you have to just give in to just being greed is good type of thing, or can you succeed? It's a good webinar. Check it out if you have the time, and you can see a lot of the ones. I mean, we're doing these every week to every other week. These are all unique. It's not canned stuff. We make them. They're up to date. There's past ones about, if you really want to dig into more basics of crypto, some of the investment strategies inside of here that we have crypto-wise, and just regular investments. So check them out. Coming up next, we're going more into a traditional populist investment side of things about AI and NVIDIA and, some of the feelings of FOMO and what so be sure to sign up for that one as well. So let's start on today's topic. So again, welcome everybody. Hope you are having a phenomenal start to the fourth quarter. I know most people probably don't keep track of quarters unless you're in the finance department of your job or you're in the finance industry with us. But of course, it's top of mind to us. And it's fall, and you can go get your pumpkin spice, whatever it is these days. So digital assets is my preferred term for crypto, but digital assets does encompass a little bit more than just crypto. And we'll talk about that. And some things that some people think is crypto, probably not really a currency. And so we'll talk about that a little bit as well too. So let's dig in. Of course, my format is we have to be careful, especially if we get a lot of people in here, but I will try to answer some questions as we go along. I feel like it makes it a little bit more fun, breaks it up a little bit. But if we do get a lot, I've got to keep going on and make sure that we can finish the webinar on time, and then I'll hit the questions in the end. Remember, just throw them in the chat over there, and we will sort them and get to it. So digital assets are complicated. They really are, but investing in them doesn't have to be, because you could start to go down the rabbit hole of learning about, blockchain and distributed ledger technology and the different applications that some of these innovators and coders are putting together. And man, you could really go down the rabbit hole of a lot of complexity. But the nice thing is the last few years that a lot of the providers trying to bring the things to investors and to just regular people have made it pretty simple. Okay, now we have to be careful that with this increased access, we don't get scammed or what so, but we'll talk a little bit about that as well too. So, really, kind of in my bottom line up front, I'm going to give you some background information. We're going to talk about how you can do it, but start small and then you can scale up. And I find that when you own something and you play around with it a little bit and you have that vested interest in it, you'll naturally learn some more about it because you do have skin in the game. You've stuck your foot in the pool to see how cool or hot it is, right? And then, if you do want to play with bigger money or you earn up to that and you're just like, man, the stakes are getting big on this. If I made a mistake or got, it could be bigger stakes, then you could find someone to work with, and we'll talk a little bit about that as well too. But, embrace the learning curve. You don't got to do it all at once. And like I said, they made it a lot easier now to be able to participate. So as I mentioned with some of our past webinars here, if you want to get into just talking about what it is, I've got, more beginner webinar about just learning about crypto. And of course, there are just tons of assets out there, even from like Coinbase or Gemini and crypto.com, all kinds of different places that you can take some beginner courses to learn. But a refresher today, a digital asset. I really like the term digital assets. It's where we're going. It's using this technology of blockchain or the distributed ledger technology to be able to disintermediate. I know that's a long, complicated word. I'm not trying to be jargony, but a lot of the financial system and a lot of the things we do in the world, we have all these middlemen, right? So like if you want to keep your money safe, you keep it at a bank, right? Why? Because somebody might steal it from you from underneath your mattress. Or, we've had where small savings and loans and banks went under, and then where's your money, right? You get run on banks and different things like that. And so we trust these middlemen because we don't trust each other a lot of times. And that is a legitimate concern. And so all these middlemen over time have built empires, tons of money off of this. And with digital assets, there are lots of different things we can do. So of course, the cryptocurrency name came from a lot of the first of these blockchain, Bitcoin, then Litecoin, and then after that, like Ethereum and some of the others. But a lot of their main thing was you could put money into them and then you could send it to someone, right? Just like I could take $1 out of my wallet and pay you. And so they had this currency like look and feel, and it was built on cryptographic technology. And so that was a pretty snazzy name, right? But now there's, I think we're pushing 10,000 different ones now. And the vast majority of them are kind of that cryptocurrency type thing. But there's some exciting things out there that are being built that are actually programmatic languages that they're building programs and apps upon, and smart contracts and things that are going to do awesome things for us and disintermediate the world to where we can almost egalitarian work with each other instead of paying tons of monies to banks and insurance companies and trust companies, title companies, et cetera. There's so much value there. So some of these things have value more than just me and you bidding up the price. And that's where a lot of people, but there are a lot of the currency ones that are speculative. We call them meme coins, just like you've heard of the meme stocks, right? And the vast majority of them are in that category. So still buyer beware. I think a lot of people are still going to lose a lot of money, even if the legitimate cryptos, if you were to buy a basket of them, do really well. So that is my thing about I believe in this technology and this asset class so much, but I still think a lot of people are going to lose their shirt. So this refresher of what I'm telling you about is not how everything works or get into it. I just want you to understand what it is. It is this technology that, yes, we can send payments back and forth like PayPal or Venmo, but doing it with blockchain. But there's also cool technology that industries are going to be built upon, and a lot of them get paid to do it almost like a highway or like a turnpike. And so there's cash flows and there's businesses that are going to be built upon it. And so it is not just a Ponzi scheme or whatsoever, even though a decent amount of meme type stuff are probably going to hurt people. But so you got crypto, you can have NFTs, okay, which, you've probably seen some of those where it's like artwork or videos or different things that are built upon the blockchain that makes them unique, but they still might be like limited prints of the real painting. Okay, so it's you could go into a whole side thing about this. This is not what this one is about. I don't want to get into arguments about it. There's digital securities now. You're seeing some companies like Vanguard try to put some of their funds up to where it trades on blockchain, and we may be able to trade them with each other rather than necessarily having to go on an exchange or buy them through a custodian or what. So there's some cool things. I think eventually you're going to see where we can crowdsource, mortgages and buying homes, and you could fractionalize business interests and all kinds of real world assets. That's what this is saying, tokenized real world assets. So digital assets encompass a lot of things. I mean, for now, crypto is the main thing most people are interested in. It's probably why you're here. So we'll kind of stick to it. But just keep in mind, there's a whole world that's going to be built on this blockchain. And I think a lot of the really valuable stuff is not going to be in the currency type nature of digital assets. So a more appropriate name of the things you probably want to invest in for the next 5 to 20 years is going to be digital assets, not necessarily cryptocurrency. Okay. So let's keep on rocking on. I kind of talked about this, that distributed digital ledger. It's secure, it's transparent, it's nearly impossible to alter. The bigger it gets, the longer the chain gets, the more that people participate on it, the stronger and stronger and stronger it gets. Okay. And it's kind of like a Google Doc for finance. Everyone can see the changes, but no one can alter the history, or you have to have a majority. And like I said, when it gets real big, it's really impractical to be able to take over the entire amount of the distributed ledgers on numerous machines all across the world. And so that is that. So now let's dig into, now that I did that refresher, let's dig into, well, let me see if anybody had an early question yet. Okay, somebody said they couldn't see the presentation, but I assume that's pretty good now. Hopefully they helped you solve that. So what's your motivation? We're going to turn around to what's yours, right? And these go from probably the best down to not good. And then I've got a different perspective to look at it a couple slides from this too. So are you motivated to build wealth? And when we think about that in our industry as financial advisors and wealth managers, that's long term. It's like, hey, I've thought about this as well as other things that I want to invest in. And I think that digital assets or crypto is one of the eggs in my basket of financial instruments that I want to invest in to compound that wealth. So that's what we're talking about there. Speculate. A lot of people speculate. I mean, I would imagine there's probably as many speculators or more in this group than wealth builders right now, even though you may not classify yourself as this. And that means you're into the short-term trading and the market timing, or I got to get in on this. This is a good opportunity, but I got a few $1,000s that I got from my grandma or on a bonus, and I'm going to shove it into here, and then it's going to make this, and then I'm going to take it out, and I'm going to pay off this stuff, and I will have made some money. Okay, so there's nothing wrong with that, but over time, this kind of equates a little bit more to gambling necessarily than investing. And if you do it enough, depending on your luck and skill and research, you will more than likely make or lose as much as you gain. It tends to not be a very good long-term investment strategy when you do it over and over and over again. Even professional Wall Street investors that have education and this is their entire profession, they have lots of resources. Sometimes they're using the resources of big Wall Street firms. When we look at them over 10 or 20 or 50 years, most of them underperform the markets if we do a risk-adjusted adjustment. So like if they're using way more risk and they beat the S&P 500, but they took 2 times as much risk and they only beat it by a little bit, that's still bad, right? And so when we look at that, they underperform the markets by 1 to 2% per year. So, some of these you got to take in and just understand. Sometimes you just got to learn. Sometimes you can do it with you're young with money that you don't need, and then you win and you cash out. Heck, some people do that at the casino and they win. That is not the norm, and you should know that. FOMO, again, kind of getting worse down there on the scale here. It's just the fear of missing out. It's like, hey, my friend, invested in Bitcoin with his 40,000, and now we're pushing 120. Like, I want to make some of this money too. Somebody told me it was going to go to $1 million. And unfortunately, when we look back over even just the last 10 or 15 years, over 60% of people that buy based on this emotion are buying near the top, right? When you start getting that push and then you invest that way, it just lowers your probability that you'll actually make money off of that. And a lot of times when you did buy near the top and then it comes down, then it burns you. And then you don't want to invest anymore, which is sad, because investing in the long term, when you compound it over long periods of time, especially if you get some of the tax preferences and stuff we're going to talk about, get awesome compound rate of returns, and that's how you build wealth. But then you get burnt on something short term like this, and you think it's a scam, and you don't invest, and you're not going to accumulate near as much wealth as someone else. And then, of course, the worst, in my opinion, is the get rich quick. And unfortunately, with all the Netflix series and all the books, and all the talking heads that want to sell books or shows or podcasts. It just seems to be the main thing that is in people's mind, that they're going to do this and get rich quick. They're going to make YouTube videos. They're going to be an influencer. They're going to start an OnlyFans. I'm going to put all my money in crypto, right? These are horrible ideas to a certain degree because statistically, most of us won't be able to do it. And a lot of them are going to lose. Of course, the ones that get publicized are the very minority, and then we all think we can do it, and we're just throwing our money away to someone else. So really, this is where you want to be. You can play here sometimes. Heck, I've still got older clients that do this with a small side account that they like to play with, but not necessarily with their serious money. So again, go ahead and throw your questions up if you got them. So again, desire to get rich fast is the surest way to lose money. You can be a outlier and win, but statistically, you're not going to win this way. And you can read all kinds of stuff about things all the way back to like the tulip mania, in the 1700s. I mean, there's a great book if you're interested or you're a reader here called Manias, Panics, and Crashes. Check it out if you're interested. This is not a new thing to people with the tech boom and bust, or even as recent as the Great Depression, right? Humans have been doing this for a long time. So don't gamble, invest. I don't know if this is too old school for a lot of you, but look at the Dirty Harry there. And the guy's like, no, the AI made this image. He should have made it with a revolver, but he made it with a semi. But still, he's like, you don't got any bullets left. And he's like, do you feel lucky, punk? To gamble with his life that it's not the one that's in the chamber right there. So luck is not a strategy. Now, you can play. Anybody can go to the casino, go like all those videos and put all their college loan check on black and let it ride and see if they can make a bunch of money. And there's a certain probability that happens, but will they quit? Is that actually something that's going to help you build wealth in the long term? Kind of like you look at most people that win the lottery, within a couple, 3 years, they're back almost to the same situation they were before. So if you don't build the habits and the mentality and the foundation for wealth, even if you come into some money, it'll generally just leave you again. Okay. And so getting into crypto just because you think you're going to make a lot of money and it's going to solve all your problems, but you haven't done a lot of the other things right, probably is not going to solve your problems. It's just going to be a windfall for a short period of time if you're lucky. Okay. Now you could also be at a height again, and we could be approaching another crypto winter. I don't necessarily think so, but it's possible. So now this is, I said, that second slide, I'm kind of talking about motivations of investing. Okay. So now this one's going from not as good to better. And probably this is a journey. This is a journey of like how you'll go along. And you may skip the believer one, but we'll talk about it. So speculator, that's kind of, you're getting into it because you see the benefits of it, but you really just kind of want to put some money down. If it goes up enough, you're going to sell it out, take it, do something else with it. Okay. But still, you could get in and learn more about it and invest. And even if something pops up and you decide to take it and diversify it into something different, it could turn into something better. So I'm not knocking anybody that wants to take their money and invest it rather than just consume. This is still better, right? And you may always have a little side pot of speculation money. And so I'm not going to knock it. You got to start somewhere, and sometimes it's fun to play, but generally you don't want to do that your whole life, or you could stack a lot of, good years or even decades together and then crap out. And at that point, that's rough. If you really mess up when you're in your late 40s to early 60s, because it's hard to start over. And the compounding power of money, really, time is your biggest ally to start compounding, where the interest goes on the interest goes on the interest goes on the interest. So if you can stack 20 to 50 years, the longer you go down there, the better it is, to where the accumulation or the interest that you've earned, the gain, is a multiple times the principal. Okay. And so that's a very important concept to really get a hold of. And so that's kind of that get rich slow thing, and it works to a high probability. So then the next is the believer. And you possibly could be a couple of these things together, but like conviction in the technology. I have multiple friends because I'll do study groups for crypto/digital assets, and also for investing and financial planning and different things. And a couple of my crypto groups, there's some people that are just real believers in the technology and sometimes of a certain thing. I think Bitcoin tends to be the one that most people really kind of believe in. Maybe Ethereum is like a second or so. So they believe in the technology, longer holding periods. They have a philosophy that goes along with it, maybe like some of the early stock investors or what so. And they do tend to concentrate a little bit more rather than putting their eggs in different baskets. Allocators, these are people that are more like what I was talking about, of putting your eggs in different baskets and saving well and saying, I need to have a certain amount of my wealth in these different things that I have conviction in, or my professionals have conviction in, that are going to grow well long term. And I like to have the different eggs because I believe that I can't predict the future or the sequence of returns or what will happen in the future. And that's why I want to put my eggs in different baskets. And if I like these things and I continue to like them as the markets change, then in between them, I can buy low and sell high and accentuate my returns, adjust my risk. It's very sophisticated if you do it well. Very smart strategy. Integrator, and then you start to even move beyond this when you have some things like digital assets that not only are an investment thing, but also can help you in building your businesses or controlling your life or do actual side utility things for you. Okay. And you can integrate it as a part of your whole wealth strategy, maybe help you in transactions. You're an early adopter or in a certain part of your business, plus it's an investment into part of your wealth as well too. So it's almost doing double or triple duty. And that is cool, right? There's not a lot of assets you could do that with. So continue learning as you go through this process. I'm going to flip more into probably why more of you are here into the practical side of things. And so again, I showed you on our webinars here, you can sign up for some of our early one there that explains crypto in general. And then let's see, where's the other one here? Then there's the investing in crypto that I had. I had a third one. I don't know that you want to watch it or not. It was kind of like when the election was coming and we were having some of the tax changes and people were worried about inflation. So about a third of that was about crypto. But still, if you're interested in seeing it kind of in historical context of how we've talked about it, then it's still good. It's good content. It wasn't that long ago, right? But still, check it out. So let's move on. So here is our outline for the practical side of things, or kind of my part two here. And so, I want to get you in a responsible mindset. I want you to invest in digital assets and into crypto, but I don't want to sit here and be enabling people to speculate and then lose your stuff and then decide you don't want to invest anymore. It's too important for you to build your wealth and to learn how to invest, and that it's rewarding and it's going to help you accomplish your goals for me to just enable someone to just gamble better, basically. Then we're going to talk about the different investment vehicles and how you can get access well, and then putting it all together into regular kind of investment and financial planning. And then we'll tell you a little bit about, how we approach it and help people, et cetera, if you do want to partner sometime in the future. So when we look at this, it's like, how do we invest responsibly here? You can see you gotta adjust for risk, right? First of all, we need to understand, and I hope if you've looked into it any time or even paid attention, if you think the stock market is volatile, crypto is multiple times more volatile than most of the stock market. So if you can't stand when the markets go down, 20, or in a bad downturn, 40%, like think about crypto going down like 90. Okay. So if you put any kind of considerable amount of money in there, it absolutely can and probably will have these big price swings again. And so you need to be prepared for that. If you're not, it may not be a thing that you want to do. Okay. Regulatory uncertainty. I mean, come on. I don't care if you're on the right or the left. Nobody trusts the government right now. And even though the government's kind of pro crypto right now, they're messing around in ways that are almost self-dealing, possibly illegal. And so when things swing back the other way, there's going to be regulatory uncertainty. So be prepared for that. I do think that this is an important asset class. It's more important than just certain people making money off of it. So I think it will survive and do well, but there's still going to be that uncertainty out there as some of these things get ironed out. Technology and security risks. I mean, in 2000, I mean, this is just what I have statistics on. 2021, there's 3.8 billion in crypto lost, just the scams, and so you've got to be a certain amount of technologically savvy if you're going to keep some of your wealth in something that is so accessible and transferable, or even losable. I mean, if you lose your keys to restore on certain things, you can't get it back. Right. I think that upwards of 20% of all Bitcoin is lost to people losing their keys, their encryption keys, and it's gone. Nobody can get that unless they can crack the encryption, which who knows, maybe the NSA or the Chinese will be able to do it one day, but we'll see. And then access. So there are multiple entry points. We're going to talk about them where you can get in, like as we had talked about before, get your feet wet, test the water, start to learn about things. And I'm going to suggest some of the ones that are easier for that, relatively safe in terms of them helping you access it and invest in it, not necessarily that you're not going to have the price swings and what's there. Nobody's going to guarantee you on these things. And then we'll talk a little bit about how regulation has changed, and now crypto is available in different ways through traditional products like ETFs. They're actually called ETPs, but most people are familiar with ETFs. They're very much like that. Then you'll see. Okay. And then professional management options. So like some of like what we do, some of the other funds that will come out, separately managed accounts, etc. I will show you those as well. So if you're just getting started and you really haven't done anything and you wouldn't consider yourself intermediate, much less sophisticated, you don't need to be a tech wizard to own crypto. There are more sophisticated ways to do it. And as you build up more, especially if you're going to own it directly, you do need to learn these things about private keys and, extensions, wallets in your Chrome, and different things like that. Okay. But for now, this is not an advanced owning, storing crypto. This is, I'm talking about investing it, how to get you started, how to do the things that aren't going to get you into trouble with these, even though they are more sophisticated and safer for storing larger amounts. Okay. So I would start with secure and regulated platforms. Okay. And so when we look at that, the easiest by far that most people have access to, most people do something with PayPal or Venmo or what's. I would imagine most of the people on here have these, right? And so inside of your wallet, your app here, you can buy crypto. You can't buy a ton of different ones, but you can see you can buy Bitcoin, you can buy Ethereum, you can buy Bitcash, you can buy Litecoin. Same thing with PayPal. I mean, actually, PayPal owns Venmo. Some people don't know that, but it's pretty easy to buy it inside of there. It's not necessarily the cheapest way. You're going to pay 1% to 3% on the purchases, but that's not out of the realm of unreasonable, because what would you have done otherwise, right? And if you go on certain peer networks, or if you were to go to the next thing I'm going to talk about, to like Coinbase or Gemini, and you're not trading very much and you want the basic tools that are simpler, they're straight up going to charge you like 2 or 3%. Okay. And so again, it's not the end of the world with crypto growing as much as it has. Oh, you would have made tons more than that. But still, I think in the long term of things, it isn't going to be the most economical way to do it. But man, it is so convenient. If you already have this app, you go on there, transfer some money from your checking account, buy half Bitcoin, buy half Ethereum. You own it now. you officially own crypto if you never owned it before. If you get more sophisticated in the future, you get a better trading platform, you can just send that right over to your Coinbase, or you can send it over to an extension wallet and then put it on a Trezor and lock it in your safe. So again, I'm not going to get into the complex things, but these are not end all be alls either, but it is a way to get in and to get started if you want to save. Now, I will tell you, once you start to, let's keep going. I should have gone to this already. Once you start to build up and you buy more you may, if you say, hey, I just want a dollar cost average, I'm going to take $100 per pay and put it into crypto, and I really don't know what to buy, and I don't want to do a lot of research. I have multiple friends, like I said, that are very serious and very sophisticated. Some of them know more than me about blockchain and crypto, and most of what they put their money in is Bitcoin, right? And so, like, if you check out some of these things like river.com and strike.me, and I've got it up here where you can kind of see, like, you can do that dollar cost averaging, and if you set it up with recurring buys, 0 fee. That's cool, huh? And then even if you keep some cash in there, you're earning 3.75%, which is better than most banks out there. And so, if this is something you kind of believe in and you want to save little by little, these are really good alternatives to just start building up from wherever you're at. So check them out. And if that's something you want to do, say you build up a decent amount in Bitcoin and you're like, I would like to trade a little bit more, have a portfolio of crypto, then that kind of gets you into, use one of the big crypto brokerages. And so the two biggest are Coinbase and Gemini. Kraken's up there as well too, crypto.com. I think Coinbase is probably, in my opinion, just because they have the most money and investment in and have tangled a little bit with the regulators, probably your best bet here. And so you can open an account, and then you can either use your app or you can get online and trade. And you can have simple trading where it's just like, just buy this with this amount of money and it's easy peasy, right? You can do systematic trades as well, just like we were talking about with River and Strike. But if you get more sophisticated, you can switch yours over to advanced trading, which if you trade a little bit more, you can get better execution prices and and you can get all kinds of data and charts and etc. So it's pretty powerful in terms of what you can do with it. There's lots of learning resources here as well too. I like Gemini a lot as well. I'd have to say they've kind of been on my crap list a little bit because they just would never list Cardano, which is one of the ones that I like, ADA. But anyway, and that's just because the owners just had a beef with them, which is just ridiculous. But anyways, I just wanted to show you these as you want to buy direct crypto. You don't want it to be complicated. You can start real easy with something you have already, like Venmo. If you really are building a plan of how you want to invest, you're cool with Bitcoin, and you want to really keep your costs down. These are great ideas. You want to do it in a IRA, Roth IRA, check out the Bitcoin IRA. It's one of the more low-cost ways to do it. There are more sophisticated ways to do IRAs and stuff. We help our clients with some of those, but it does not tend to be as low cost and as simple as this. So again, throw your questions in if you want to. I'm trying to hit practical stuff right now so you can understand. And then custodians. So this is where, and again, I'm just showing you how to access right now. I'm going to try to put it together a little bit more in my, section or part 3 of putting it together. Right now, we're just talking about access. So custodians that allow crypto, I think Robinhood's like the main one, right? They were very early on it. It wasn't the best how they were doing it before, but they've upgraded it a lot. And so, you can buy crypto in here pretty low cost. This is just their crypto page, but they do all kinds of stuff. I mean, you can invest in, stocks and ETFs, and I would stay away from options and futures for most people unless you're really sophisticated. And I mean, personally, you got to be careful in speculating with crypto as well too. But they do IRAs, and this is just more sophisticated, right? But it is kind of a buyer beware playing space. It's like, they say there's no trading fees and stuff like this on a lot of things, but how they put your orders out to market makers and the other side, they can get you on the spreads, and they try to gamify it so much. They've had lawsuits to where people want to sue them because they're like almost like gambling, tricking you into like wanting to push the button and buy and sell too much. So the platform is pretty cool, but just be careful. They want you to trade more because they want to make more money, right? That's how they make money. But this is a pretty good platform just in terms of like mixing lots of different assets together to where you could put those eggs in different baskets, like I said, if you want to own crypto, but also want to put it in with other things that you invest in. Okay. And then interactive brokers. That's probably one of the best trading platforms for like stocks and ETFs and, getting data and charts. Technical trading is just terrific. Their crypto access is very lackluster though. There's only like four trading pairs that you can do. It's like Bitcoin, Ethereum, Litecoin, and Bitcash, I think. So very limited in terms of what you can buy. But you can't buy those, and those are, especially the Ethereum and Bitcoin is not bad. Those are the two main of what they have that are pretty decent that you would want in your portfolio. That go away. But I hope they'll add more. I think they have a partnership with Paxos. Again, I'm a tangential person, so I'm going to try to cut it down and stick to the script here. Schwab, lots of people deal with Schwab. They're like, I think the biggest custodian just in terms of straight up dollars. They say they're going to put some crypto up soon. They're super conservative company though. I'm kind of in the camp of I'll believe it when I see it type thing, and I wouldn't be surprised if they just do something like interactive brokers and only let you buy Bitcoin and Ethereum and nothing else. Fidelity, I'm really surprised they don't have it already because they've been so gung-ho on digital assets. They even have a Fidelity digital assets whole like part of their company, but it is totally separate from like their 401k and their IRAs and non-qualifieds and their mutual fund side of things. So I think that they're kind of like, the evil stepchild over here, or drunk uncle or something that nobody wants to infect the rest of the regular investment platform. But I do hope that they add it soon. And again, do like Coinbase to a certain degree and try to put education out there and help people invest well. And Schwab and Fidelity, Schwab has their own advisors, and they work with people like us that allow people to get professional help as well too. And it's a free country, right? You can't protect everybody from everything, and certain people will hurt themselves with the tools they're given, etc. But this is going to be a great way eventually. I think this is the ideal way eventually. Once these things are integrated in, I'm really hopeful we'll get access to Robinhood soon. They bought a company called Trade PMR, who we're looking to maybe add as a custodian as well too. So I'm hoping that'll give us access through that route. But I do hope some of these traditional custodians will come along as well. Path 3, crypto ETFs are fun. So a lot of the legislation, SEC is kind of loosened up now to let some of these ETFs that have been filed for a long time come into being. And so, last year we saw Bitcoin ETPs. For now, we're just going to call them ETFs because it's what you guys know. ETFs come about, and so there's multiple of them available now. They're spot, so they track the price very well, but you don't actually own the underlying crypto. You have the price participation, but not of owning these things directly that are kind of on the ledger. Like you can self-custody them. Like I said, if you own an Ethereum or a Bitcoin, you can download it onto a little USB thing. You can unplug it from the internet. You can put it in your safe, just like a gold bar. So you lose that aspect of it, but you still get to participate in investing in the asset class, which I think that's what most people want. And so these work very well. And especially for, most people that are probably like 40 years and older, they're a lot more comfortable and familiar with mutual funds and ETFs. And so now it's like, they're like, ooh, okay, I'll buy an ETF. And so I think it is opening up. Then also on our traditional custodians and in IRAs, Roth IRAs, and more traditional type of accounts where a lot of people's money are. We can buy these ETFs inside of there, and then we can make those different eggs in different baskets, a crypto or digital asset. Traditionally, we don't know exactly what will happen in the future, right? Has been an awesome asset allocation because it's a great diversifier, because it has had great growth potential and it goes up and down at different times in stocks and bonds. Only oil is as non-correlated. Non-correlated meaning it goes up and down at different times, right? And so that's why, like, a lot of us that think, lots of eggs in different baskets, like beautiful portfolios are sexy, right? And having a little allocation to digital assets inside of a well-built portfolio, if we continue to get that price performance and non-correlation, is a huge, awesome thing. Okay, so not to get jargony on you, but I have been working on this for like 4 or 5 years to bring this to our clients, and I'm very happy that we can now. Okay, so you're going to pay a little bit here because we are taking something that cut out the middlemen traditionally, and now we're adding the exchange and a custodian and a fund provider as well too. So you're at a middleman, so it's going to add costs. So, down from, maybe paying zero if you traded really well or got a good spread, et cetera, maybe up to 0.25 to 1% per year. Okay, depending on what you get. Now, I do think this is coming. It's not approved yet to where they're going to do like multi-asset type things where you can almost buy like an index fund of the cryptos. So buy one ETF that just has some inside of there of some strategy that you like, and it's done for you. And there are these private trusts. They're pretty sophisticated, that have gotten sold onto the secondary market that you can buy, but they're pretty thinly traded, which means they don't buy and sell a ton. I mean, they do relatively, but not compared to things that are very liquid. And so I just, unless you know what you're doing, just stay away from it and just wait for the ETFs in whatso, or get some professional help if you're talking about serious money to you. So just a little chart, just so you can kind of see, know what you're paying for, right? If you learn this stuff and you self-custody and you're buying the stuff direct and you could trade well and you got a decent amount of volume, paying very little. You go on an exchange where you're going to pay some of the fees to them, not necessarily get as good at execution. This is per $10,000. So we're not talking anything ridiculous here. A spot ETF, maybe you're paying 200 out of 10,000 because you're paying that 0.2%. A managed fund, maybe 0.5%. I think you'll pay anywhere between 0.2 to 1.5, depending on the strategy. So this one's just saying, hey, 0.5. So these are just estimates, but just to give you an idea of what's the different costs here. Again, throw your questions up if you got them. Protect what you own. Very important. You got to have the two-factor authentication. I would not use SMS as much anymore. I can't tell you, I get 2 scams a day almost on SMS on like some of my crypto stuff now. Use something that makes your face to open it. Plus it's in an app that gives you the code, and it's on your phone that you need some kind of factor authentication to get into. And then don't trust any of the scams. If anybody trying to call you or, text you about your Coinbase account, etc. Think about where you're going to custody. Try to keep it as simple as possible to a certain degree so that it's not too complex that you forget where things are, you forget keys or what the combination was or what the password was. And then, avoid scams. And if you're not sure it's a scam, paste it into your AI and ask your friend. Go to Coinbase's site and look up the number and call them directly. So be careful, okay, on these things. It's easy for them to take your money if you fall victim, and you're not going to get it back generally, okay? So like I said, build gradually, diversify over time. If you're, when you're younger and you speculated and you won, at a certain point, take off the table and diversify. Okay, you won. At a certain point, you got to get up. Don't just let it ride until you lose. Okay, and then pair with some traditional investments. Traditional investments are not dead. They're not just the old thing. They are how our financial world is built upon. Cash is how we pay for things. Bonds are people borrowing money to start and run businesses. Stocks are the ownership of those businesses. Like all these all of human effort and like what we're trying to make, and we're all going to business or going to work in. And if you're an entrepreneur, you started the business, that is like the value of what we created. It's not going away. Okay. Crypto is just another tool and another asset class that's a little bit different than that. Okay. Okay. So this is our part 3. So putting it all together. So now that we know a little bit about crypto, we know how to access it. How are you going to do this successfully to really build wealth? And I hope you're beyond a lot of these first steps. But if you're not, get your house in order. There's $1.1 trillion worth of credit card debt in U.S. households, as of the beginning of this year. And the average interest rate's 22%. If you're paying that and then you're going to take, money that you don't have to go invest in crypto, like, what are you doing? Pay that off. Pay it off. And really, to be able to do that, you need to be living within your means. Why'd you run that up in the first place? Are you spending more than what you make? Don't do that. There's a lot of people do that and then say, well, when I get a bonus, or I'm going to work some overtime and I'll pay this off. Like, no, you need to live on what your base is conservatively, and then even build room into that to be able to save over top of it. Then when you get those bonuses and whatever windfall that you get, that's extra stuff you can do to either consume some of it or save, right? And that's, you got to get that right. And then I'm going to get a raise. I'm going to get promoted. This is just a short-term job. When I get this, I'm going to make more. You live within your means for whatever you're doing right now. And if you get that upgrade, you just keep carrying it on to a higher degree. Okay. No wishful thinking. Do the disciplined right thing right now and save consistently. I tell people, unless you're saving 20%, you're not saving well. If you got to start somewhere, right? If you can get to 5% and you were saving nothing, great. I mean, I'm proud of you, but you are not done until you can save 20% of what you make. And at first, most of that may go to your emergency fund, right? You need to get up to where you don't have that credit card debt or high interest debt, and you got 3 to 6 months worth of expenses in a savings account. So when the next bad thing happens to you again, so I'm sure it has, and it will again, then you can pay for it and then you can save it back up. You don't owe anybody anything, and it doesn't knock you down. Okay. Make sure you got the right insurance, whether it's health. If you can sign up for that group disability insurance, if you are under 50 and you don't have group long-term disability insurance, you need to have that. I mean, I know it's harder in some construction jobs and, more blue collar, harder jobs, but if they give you the option, that's the main thing that'll knock people down. Almost like a 1 in 4 chance that, between 20 to 40, that you're going to become disabled for some decent amount of period of time, and that can really knock you all the way back down the ladder. You've been climbing for like 10 years, right? And it's not that expensive usually if you're getting it group wise through work. Income protection, as you keep making it, diversify your income or your skills or your networking so that you've got options, right? I mean, being out of work for a decent period of time really hurts people. It happens to our clients even when they thought they were secure. So once you get there, then get your free money first, okay? If you have 401k and you're not putting into it, that's crazy. Most 401ks match something, even if it's just the first 3 or 4%, right? I'd say the vast majority of them, they'll match 4 and you need to put in 6 to get 4. Okay. So like what I say is minimum 401k wise, you need to be at 6%. Get your 6% into there. And really, if you're taking care of your emergency reserve and everything else there, I like to see people putting in, 15%. Because if you can do that for a few decades in a row, that compounding is going to work for you phenomenally. And a lot of people say, well, I'm not getting a match over the, 6. And so the government is matching you, right? If you save pre-tax, you get a tax deduction. Most people in the United States today are not paying a lot of federal taxes. So you probably should be saving Roth. That means you get to keep all the growth tax free if you follow the rules, and then elect your health insurance correctly. And for most people, they're going to be in high deductible plans. And that means you can have an HSA that's pre-tax and tax-free when you take it out. And so if you plan this right, this is a decent amount of money. And later on, you could use this for retirement if you have too much. I don't find too many people with too much, but if you do, that's a good problem to have. Okay. And then optimize how you're saving. And so there's certain accounts you should fill up first. And I started to give you the sequence to that. But again, I gotta keep moving along for time. So get that foundation built right. You don't want to build a house, straight up on the dirt or on the mud, because over time it's just going to crack and fall down and not be secure. You want to dig down and put in a foundation of concrete, maybe have a basement, and the foundation goes even deeper and hits the bedrock. And so this is what we're talking about. Have these things so that even if you do well investing in crypto or whatever you invest in, that you're going to be able to use that to springboard off of and have more success, rather than just having to fill in holes and fix cracks and build a whole dang new house, right? And then it's just gone again, right? And then use these things, the traditional things that may seem stodgy. I think you're going to find that they're going to allow to have crypto eventually in 401ks. And already now we can do IRA and Roth IRAs with crypto and other alternative investments. You got to be careful. We don't want to make stupid speculative decisions. But it's not just old stodgy stuff. It's smart, right? The government is going to give us money to do these things and match us on top of the employer. We need to use them. And then beyond that, once you're successful and you got these things down and you develop your career, you're probably going to be able to save more than just what you can put into your retirement accounts. And then that's where we start building up, non-retirement accounts and maybe buying rental or something like that. And then later on, who knows what the next new thing will be after this, then you can be more opportunistic with that kind of fun side speculative account if you want to. So again, we talked about this. I'm not going to hammer it, but really just wear a FOMO. I mean, our emotions are what drive us, whether it's fear or FOMO. Those are just the extremes. FOMO, wanting to buy because we think that we're missing out on this awesome opportunity, and the fear of that everything's going to collapse, we're going to lose everything, we got to get out. These are why most people underperform investment wise significantly. Okay. And so just be careful of this. Understand that this is what drives you. We're all, even me, been doing this for like 30 years. Like, this hits all of us. Recognize it. It's the only way to be able to change it, and talk to somebody about it. Talk to your AI about it. I mean, they're almost like counselors these days. But if you got a significant amount, you might want to get like a financial partner, like an advisor or what. But interview some people, because some people are not out for your best interests, and you can find a decent amount of us that are. Okay. And then combine discipline with open-mindedness. What I mean here is kind of what I said in the last slide, is that you may have to take a year or 5 years or 10 years to really get to where you get your house in order and you're kicking off all this excess stuff to where you can invest a lot more. And you may feel like you're missing out on the ability to get in. There's going to be something else. Who knows what the 2030s will bring? AI is going to help us create something we probably never even really envisioned before. There is going to be another pitch, and you're going to be standing there ready to hit it. Right. And so you don't always have to get everything right now. Build up, think about things, make good decisions, save well, invest where you can. And if you have the ability now, I showed you how to do it some, but keep an open mind, because a lot of people, when they get older, then they're just like, oh, that's a scam, blah, blah, blah. I would have invested back in crypto now, but with this new thing, that just sounds like a Ponzi scheme. That's the tragedy, right? It's like when it's kind of like the old guy that couldn't afford the sports car when he was young, and now he's 70 and he's got this $100,000 car. And you can pick up all the girls, right? But he's too old. So same thing kind of in investing. Once you get to the point there, keep an open mind, because that new thing's going to be there again. And you don't want to just get into fads. But things like this, after you do your due diligence, there's going to be more great opportunities. So when it gets complicated, get help. Between AI being able to help you, if you can ask the right questions in the right ways. We have financial coaches and advisors. We're trying to find ways to even make some of our coaches be like cyborgs, to like combine stuff together to be able to help more people so we can bring the cost down. I mean, good people are expensive, but we're trying, to bring the cost down and make it affordable wherever you're at. But get some help. There are lots of different ways out there. As I mentioned, I do some kind of operational kind of like practice building things with some of my peers that are entrepreneurs. And, one of the things we talk about when we start our meetings, hey, there's lots of ways to win. your way doesn't have to be the right way or this way. And so I know a lot of my peers that have built different businesses to serve people like you to help them be financially successful, and they do it different, right? And it's okay. And that means you just need to look out there to find you a fiduciary, which means somebody's going to put your interests before their own, that isn't going to charge you too much, so that there's lots of meat on the bone for you to grow and compound your money, and that you guys get along and know that they care about you and your family, and helping you accomplish your goals. Okay. And then protect things. You're going to have to worry about taxes. If you're successful, you look at all the deficit spending we're doing and all the debt, we're going to have to collect some taxes, right? But some people are going to pay a whole lot more than other people with poor planning, and less forethought of looking at the future. Your estate planning, if you're successful, a lot of wealth is intergenerational, and you may not have had that, but you may be able to pass that down, and that's great. And then risk management, especially we're talking about these risky things. We got to think about, even if we're going to invest in risky things, how do we do it wisely? Because you could invest in the same thing and take half as much risk and get 90% as much of the gain. That is great, rather than just rushing in and possibly doing something that is precarious, right? So this is just a little bit about Rebel. I'm not going to hit it up too much, especially if there's any questions, feel free to throw them in there. You can check us out, just rebelfinancial.com. You can schedule a complimentary consultation. There's where all the webinars are that I was going through. We're pretty transparent on our services and our pricing, etc. We are a B Corp. See, yeah, put it in here. So we really believe in taking care of the world and community and our employees and our customers, not just shareholders. We're a fiduciary to our clients. We really like technology. We have a lot of clients that don't like technology. We do it for them and kind of make it simple. And really, we want to help people be better with their own money, so that we can help address income and wealth inequality by helping you do better and not just blaming politicians on it, right? So check us out. Let us know if you have questions, if there's anything that we can do to help you. I think I put into here, that's a QR code. If you want to schedule an appointment, you can do it on our website as well too. And, throw some questions in there. Yes, we'll send out the slides afterwards. We may make them available on that page as well too, on the on-demand. So key takeaways: put your foundations first, speculate later. If you just have to get in, put a little bit in Venmo, PayPal, or your Coinbase, just so you can start to learn and have some skin in the game, and then hit those things to build your foundation. Choose the right access and think about where you're going in the future. Integrate crypto into a holistic financial plan, not just that is your investment and your hopes and dreams of financial success. And then when you are successful, or even from the beginning, you want some help, find it and get it. So if there's not any questions, let me just make sure and look through here. Main one I got is, can I get a copy of the presentation multiple times? So yep, we will make that available to you. I probably got to make a couple edits just so that I can just have it out there for compliance approved. But yeah, we can do that. And join us next week. Like I said, we're going to be talking about, I missed out on AI and NVIDIA, what's next. So we're going to talk about some of the things that may come up for AI next, or that AI might morph into, or some other opportunities that are out there, investment thoughts, right? Not necessarily advice, but things to think about so that they'll be on your radar. So thank you so much for joining us. I hope you have a very spectacular, happy end to your Wednesday, or if you're watching this on demand, whatever day it is. Hope to see you next time, and have a great start to fall. See you then. Bye-bye.